Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has continued to press on higher and now taking out a level of 74.55 has left me neutral in the short term, with this strong candle coming through overnight and mainly on the back also of the iron ore prices surging to a 7-year high is around $150 a ton. The market has found a bit more momentum. Nevertheless, we are overbought. That could give us some interest back to the bearish case and see a pullback towards the support line coming in somewhere where I highlight it at around 74.70. Nevertheless, the bulls have been relatively strong and at present probably looking now towards, we go to the broader picture and adding in this next movement, we could see somewhere around 76.50, 70 as a potential target. Although that is a broader picture and I don't have a very strong view at this present stage, I would rather like to see how the market sustains above 75 cents in the next 24 hours and see where the New York closes for the week and then get some assessment into next week. Well, the US dollar slipped overnight and found momentum for the euro as the ECB kept rates on hold. But nevertheless, the market is still pushing back towards that top side of the range, seen somewhere around 121.70. I feel from the technical point and also from, if you look at the midway point, didn't quite break that level and therefore has left the indicators a little bit mixed. So where I'm neutral on the Aussie at the moment, I will stay neutral with the euro until we get some clear indication and better opportunity of what this market can actually unfold into, whether it's going to be more of a bullish or bearish outcome. Talking of bearish, well, the market has found a little bit more weakness for dollar yen after the topside rejection from the mid 104s has now put a slightly bearish case on the market and looking down towards 102.80.90 as a still potential target that I've been viewing since the recent breakdown. Sterling still weighs on the 133 level and now finding the technical implications still looking very much negative, and also with the in conclusion of the Brexit deal, the market is still finding the pound struggling above 133. I view the market should head towards around 131.60.70 due to the market close, but I would like to see a New York price under 133 as it hasn't quite fully done that yet to confirm the bears lower. But the technicals are in main swing to support a downside case. Therefore, putting sterling yen back towards the level around 137.80. Now, a break beneath there would give further scope down towards 136.70. Nevertheless, the market is negative, as you can see by the indicators also support. So the sterling leg is still weighing on this cross. Since the rejection from the top side, I'm a little bit cautious in coming out with any calls at the moment, but I will say that we are looking, if we see a break of 1,822, possibly back towards the bottom side of the range. But we need to see a close under 22. Otherwise, we shouldn't discount possible retests towards that 50-60 area. Wrapping up with oil, well, the market pushes back towards the highs close to $48 a barrel, which still could see a move to about 50 as a stretch. Nevertheless, we are mixed when it comes to the technicals. So it might be just a brief event towards that top side of the range around 48.50 and see a pullback to about 44. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday bull. And I hope you enjoyed the great start to this new weekend.